please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Market regulator SEBI's board met for the last time today this fiscal and took a bunch of crucial decisions. Let's go over to Yash Jain, who's been tracking the meeting, joins in with the very latest. So Yash, it was an important board meet by SEBI. Take us through all the decisions that were taken.
Well, the last SEBI board meeting for financial year 2018 and the market regulator has taken some very crucial decisions with respect to the Kotak Panel-led Corporate Governance Committee report. Now, out of the total 80 recommendations which really came from this particular report, about 40 recommendations have been approved without any modification. About 15 recommendations have been approved with certain modifications. About 8 of these recommendations have been referred to the government, and more importantly, about 18 recommendations have not been accepted. What else has been approved? Now, in order to strengthen algo trading and make it more accessible and cheaper for traders, market regulator SEBI has asked exchanges to provide shared co-location units as well as to provide free tick-by-tick data to these traders. Also, in case of mutual funds, market regulator has asked mutual funds to cut down the additional expenses which they charge to 5 basis points from the earlier 20 basis points. Remember, additional expenses are charged by mutual funds depending on the AUM of any particular scheme. Also, SEBI has approved physical settlement of equity derivatives. As far as angel investments are concerned in startups, that limit has been raised to a maximum of 10 crore from the earlier 5 crore. Now, two very crucial points which the market had its eye on. One on the IBC or the insolvency and bankruptcy vertical. There, all three recommendations which include putting a trading ban on companies which go under IBC procedure, also the minimum public shareholding of 25% as well as relaxation in the delisting norms. All these three have been put in a consultation paper which will be open for public opinion for the next 15 days. One more important point with respect to the buyback process which we have currently, there market regulator SEBI has put both recommendations which include fixing a time interval between two successive buybacks from any company as well as depending on the maximum which can be offloaded in any particular buyback. Both these two recommendations have been put in the consultation paper which again will be open for the next 15 days for public opinion.
Okay, Yash, thanks for taking us to that comprehensive takeaway of what exactly SEBI did announce today. We'll take a quick break. Up next, Centre wants one-day default rule to be removed from RBI's February 12th circular. Details when we return. Welcome back to India Business Hour Plus. Now on to a CNBC TV 18 exclusive. Centre wants the one-day default rule to be removed from RBI's February 12th circular. Sapna Das, who broke that story earlier today, is here with the exact details. Sapna, what are you picking up and what exactly has been communicated by the Centre so far?
Very clearly, a very clear sense of disquiet coming in from the government quarters as far as the one-day default rule particularly is concerned under the new NPA framework of Reserve Bank. Government, what we understand is that government is in conversation with the banking regulator on this front to basically do away with this rule completely. The government's view is very clear that even for loans above 2,000 crores, there could be stress points, especially for sectors like power, for roads, for coal, where a one-day default is quite possible and can have significant implications. Even in terms of those loan sizes below 2,000 crores, well, many a time the default can be technical in nature, not necessarily an actual default. So basically, government pitching for a complete doing away of this one-day default rule. Similarly, in terms of the earlier SEBI proposal also of disclosing within one working day defaults to the exchanges, well, that proposal has not really gone forward for the time being, but there also, the government is not in favor. So we have to really wait and watch and see what happens on this front, whether the RBI plays ball with the government and this one-day default rule, at least for starters, is done away with.
All right, Sapna, many thanks for getting us those details. Time for us to slip into another break, but up next, Facebook whistleblower Christopher Wiley has provided more information revealing Cambridge Analytica's India links. What could that be? We tell you when we come back. Christopher Wiley, the man who blew the whistle on British data firm Cambridge Analytica and exposed how it meddled with elections in the United States, has made some stunning revelations, this time about the company's India connections. This is the day after he testified before a parliamentary panel in the United Kingdom and shared some information on Cambridge Analytica's activities in the country. In India, Kevin Lee brings us all the details.
Whistleblower Christopher Wiley has come out and said that SCL, which is the parent company of Cambridge Analytica, has widespread operations in India as well. If he is to be believed, then SCL India has 10 regional offices. It's headquartered in Ghaziabad, and it has a database of over 600 districts. Remember, there are about 700 to 750 districts in India. So if these numbers are true, that means that SCL India had a wide database covering almost the entirety of the country. SCL India specializes in something called caste research and analysis, which understands how caste influences Indian elections and uses this for targeted messaging in the campaigns leading up to these elections. If these images are to be believed, then SCL India has played a role in many Indian elections between 2003 and 2010. Now, the only political party that has been named in these images is the JDU. However, there are references to other national and major political parties. It says that SCL India carried out a caste census in Uttar Pradesh on behalf of a national party in 2012. SCL also provided electorate research and strategy for the JDU in the 2010 Bihar State Assembly elections. Also, SCL managed the campaigns of several Lok Sabha candidates in the 2009 Lok Sabha elections. So some serious allegations here. Remember, we've not been able to independently verify if these are true or not. But in the background, the Congress and BJP have been accusing each other of using Cambridge Analytica's services. So this establishes, if this is true, that Cambridge Analytica had a significant presence in India as well. Back to you.
Well, Kevin, the can of worms has been opened. There's a lot more, I'm sure, that will come out in the days to come. But thank you so much for joining in with that. It is a wrap on this edition of India Business Hour from Ron and me. Goodbye.
Well, many thanks for watching. We'll be back on Monday. For all of us here, good night.